Welcome to Talk Tickers, where we break down the earnings calls that really move the markets. Today, we're jumping into Keurig Dr Pepper's Q4 results, and let me tell you, this report had a lot of moving parts, and the market's reaction was, well, pretty surprising.
Okay, so here's our game plan. We're going to start with that headline earnings beat. Then, we'll break down the performance of the two big divisions, refreshments and coffee. After that, we're diving into the massive JDE transformation, a huge deal, what it means for the stock, and then we'll wrap it all up with our official rating.
All right, first up, the headline numbers. Keurig Dr Pepper really kicked things off with a solid beat on both revenue and earnings for the fourth quarter. Right out of the gate, this put the stock squarely on investors' radars. So let's dig into the actual numbers here. They posted adjusted earnings of 60 cents per share, which, squeaked by expectations by a penny. But the real story, the big surprise, was on the top line. Revenue came in at $4.5 billion, smashing the consensus estimate by $140 million. That is not a small beat. And here's how the market voted. Despite some of the complex stuff we're about to get into, investors clearly love the news. The stock jumped over 4% on some pretty heavy volume right after the announcement. That's a really strong vote of confidence in where this company's headed.
Now here's where it gets really interesting, because if you look under the hood of that headline beat, you find this story of two completely different businesses heading in opposite directions. This is where the real nuance is.
I mean, just look at this split in performance. It is stark. You've got the US Refreshment Beverages segment just absolutely on fire, surging 11.5%. And then you have US Coffee kind of limping along at just under 4% growth. And believe me, even that number hides some pretty big margin pressures.
So the beverage side, it's just firing on all cylinders. The core Dr Pepper brand itself keeps taking market share. And management was really talking up the integration of the Ghost energy drink brand, which is just accelerating their growth like crazy. Bottom line, they are winning, and winning big in the categories that are growing the fastest. But then you flip over to coffee, and wow, it is a totally different story. The business is facing some serious headwinds, and management was super direct about this on the call. They flagged major pressure from green coffee costs, from tariffs, all of it hitting their bottom line. And they said, hey, expect this to continue into the first quarter of 2026. So a very cautious tone for this segment.
So what do you do when your company is split like this? How do you handle it? Well, management's answer isn't just about cutting a few costs here and there. No, they're making a massive strategic pivot that's designed to fundamentally reshape the entire company. And this is the centerpiece of their entire strategy. This absolutely transformational acquisition of JDE Peets. And let's be clear, this is not some small bolt-on deal. This is a massive, company-defining move that gives them a huge global coffee footprint and basically sets the stage for the next decade.
So here's the roadmap they laid out for investors. First, that JDE deal closes in early April. Then, later in the year, they're launching their next-gen Keurig Alta system. That's key for innovation. And it all leads up to the grand finale, a full separation of the company into two pure-play businesses by the end of 2026.
And this is what it all adds up to. This is the guidance that really got the market's attention. For the full year, they are forecasting low double-digit adjusted EPS growth. And crucially, this guidance already includes the expected boost from that JDE Peets acquisition. That's a key detail.
So, that brings us to the big question, right? If the old coffee business is kind of struggling and they're taking on this massive, complicated acquisition, why on earth did the stock rally so hard? Well, the answer is, the market is playing the long game here.
This quote from RBC analyst Nick Modi really nails it. The market is basically saying, yeah, we see the short-term choppiness, we know there are going to be some bumps, but we believe in the strategy. Investors are buying into that long-term vision, and they're willing to look right past the near-term noise in the coffee segment.
So let's just boil down the bull case. Number one, the momentum in beverages is the real deal, and it looks like it can keep going. Number two, the JDE deal is smart, it makes sense, and it's expected to boost earnings by about 10% in year one. And finally, the end game, the real prize, is that company split, which everyone believes will unlock a ton of value by creating two laser-focused companies.
Okay, so that's the story so far. Now for our take. How does this all shape our view going forward? Well, we're calling this one the outrageous but plausible trade.
Right, so here's the big question for all of us now. After that nice pop in the stock, is the easy money already made? Have we missed the boat? Or is this rally just getting started? Here's how we think you should look at it, in 3 simple steps. First,
You just have to accept that Q1 is going to be soft. Management told us so. They set a really low bar because of that coffee inflation. Second, the story starts to get way more interesting in the back half of the year as those costs come down and the JD deal starts kicking in. And third, you have to buy into the long-term thesis that the real prize is that separation at the end of the year. That's the ultimate catalyst.
So here it is, the bottom line from us. We expect them to hit that low Q1 bar, which probably means the stock is going to trade sideways for a few months. But when we look at the full year picture and those powerful catalysts coming down the pipe, we are initiating coverage with an outperform rating.
So what's our outrageous but plausible trade? It's this: own the common stock for the core story. But if you're looking to add a little spice, you could layer on a speculative position using some long-dated call options. The idea here is to play for that massive upside potential if the market decides to give that new, standalone beverage company a much higher, premium valuation after the split.
And of course, we have to close with the usual but very necessary reminder: this analysis is for informational purposes only. It is absolutely not financial advice. Please always do your own research.